Welcome back to the Wall Street Podcast. Today we're embarking on a deep dive into a key report. Goldman Sachs, China Securities, China, New Energy Vehicle Weekly Chartbook 2025 Week 30. This was just released July 30th, 2025.
Exactly. And this chart book, well, it gives a really precise weekly snapshot of China's NEV market, new energy vehicle market, that is. It's packed with data, looking at sales volumes, brand performance, pricing trends, and policy impacts, too, specifically for week 30. That's July 21st to the 27th.
Okay, so let's get straight into the key market and brand data. What's the big picture on registrations?
Well, overall passenger vehicle registrations came in strong at 440,000 units. That's actually a 13% increase week over week. Wow.
13%, okay. And NEVs within that?
NEV registrations also climbed. They were up 10% WOW, hitting 236,000 units. So still very robust growth there.
Interesting, though. Despite that volume increase, the report notes NEV penetration dipped slightly.
That's right. It stood at 53.6%, which is down about 1.5 percentage points from the week before.
So NEVs grew, but maybe ICE vehicles grew even faster that specific week.
That seems to be the implication. It suggests a kind of dynamic balancing act happening, maybe some short-term shifts.
Got it. Now, drilling down into the brands. Who showed the strongest growth in week 30?
NIO, XPeng, and BYD really stood out on the growth front. NIO registrations jumped 28%. WOW. XPeng was up 25%.
Wow, significant jumps.
And BYD.
Even BYD, the giant, saw strong growth, 14% week over week.
And in terms of overall market share, who leads the pack?
No surprise, BYD is still number one by volume. They hold about 25% market share. Tesla China is next at 5%, and AITO holds 4%.
Okay. And you mentioned BYD, XPeng, and NIO also gained market share.
Yes, exactly. Their strong week-over-week growth translated directly into capturing a larger slice of the pie for week 30.
Okay, let's shift gears a bit to pricing and policy. Any major price cuts reported?
The report flags one official MSRP cut this week, FAW Bastoon Pony. And it was a pretty substantial one, a 15% price reduction.
15%. Is that part of a larger trend? It seems so. Year to date, the report counts 61 official NEV price cuts, and the average reduction has been around 8%. So, yeah, competitive pressure is evident.
And what about discounts at the dealer level? Are they widening?
Slightly, yes. As of July 28th, the average NEV dealer discount was 8.13%, just a bit wider week over week.
How does that compare to traditional ICE vehicles?
There's a big difference. ICE vehicle discounts averaged 21.37%. Much, much higher.
21%. That really shows the different competitive dynamics, doesn't it?
It certainly does. Now, on the policy side, that National Auto Trade-in Subsidy Program seems to be really hitting its stride.
What are the latest numbers on that?
As of May 31st, it had already received 4.1 million applications, and the pace picked up significantly in late May. Daily applications jumped from around 32,000 to an average of 45,000.
That's a substantial boost to demand. Any other things on the near-term horizon we should watch?
Definitely. Keep an eye on the NIO Onvo L90 launch that just happened today. Plus, we'll get the NEV OEM monthly volume figures on August 1st, always key data points. And then Q2 earnings are coming up. Geely and Zeekr report on August 14th, BYD on August 26th.
Right. Earnings will give a clearer financial picture. Any buzz on new orders?
Yes. Xiaomi and HEMA both had strong order intake in week 30. Xiaomi secured about 10,000 new orders and HEMA around 8,500.
Okay, let's transition to some analysis. First module, market momentum versus penetration shifts. We saw strong week-over-week growth in both total vehicle and EV registrations. But as you noted, NEV penetration dipped slightly. What does that really suggest about the market right now?
Well, it's a good question. The volume growth clearly shows underlying market strength. Demand is there. But the penetration dip might signal, perhaps, that ICE vehicles had a particularly strong promotional week, or maybe some popular ICE models saw a surge. It could reflect that dynamic balancing, between ICE and NEV sales in a really competitive environment, or maybe just short-term consumer preference shifts.
So it's not necessarily a weakening of the NEV trend, but maybe a sign of intensified competition across the board.
I think that's a fair assessment, yes. The overall pie grew, but the slices shifted slightly that week.
Okay, Module 2, brand growth amidst price action. We see leading brands like NIO, XPeng, BYD showing really strong growth. How are they managing this while we also see ongoing price cuts and dealer discounts?
It's a testament to their competitive strength, isn't it? Their growth and market share gains are impressive. But the fact that price adjustments are still happening, both official cuts and dealer discounts, suggests that aggressive pricing strategies remain, well, crucial. It seems like a combination of strong product, brand appeal, and strategic use of incentives is needed to drive volume in this market. They can't rely on just one element.
So they're using price as a tool, but it's not the only factor driving their success.
Precisely. It's part of the mix, likely a necessary part, but their product innovation and brand building are clearly paying off too.
Right. Final module, investor signals and future catalysts. Looking beyond this weekly data, what specific upcoming events or indicators should investors really focus on for insights into where the NEV sector is heading near term?
Okay, several key things. First, continue monitoring the impact of that national trade-in subsidy. Is the momentum sustained? That's a big demand driver. Second, watch the performance of new models. The NIO Onvo L90 launch is immediate, but track how any new entrants or updates are received. And third, critically, those upcoming Q2 earnings reports we mentioned, Gilly Zeeker, BYD, they provide essential financial transparency, profitability, margins, cash flow that gives you a much deeper read than just sales volume.
So subsidy impact, new model traction, and financial health from the earnings.
Got it.
Those will offer really important directional cues for the market, I believe.
This deep dive certainly provides crucial, almost real-time data on China's new energy vehicle market. A lot happening very quickly. Absolutely. And as you, the listener, look towards the second half of 2025, it's worth considering how this interplay, policy support, brand innovation, intense pricing, how it will all shape the sector's path. What factors do you think will ultimately be the most decisive as we move forward? Something to consider.